Good day everyone. So our company would be Hess Company. I will present to you the computation of equity and enterprise value. So for the information of everybody, these data and information are gathered from the latest financial statement of Hess Corporation, that is 2021 data. As we do a research, some of the computations here is already available on the data. But still we find and compute those items in the financial statements of the Hess company. First is the computation for the equity value. That is simply the outstanding shares multiplied by the market price per share. So in the Hess company, there is no preferred shares issued in outstanding, but it only had common shares outstanding of 309,727,000 times the market value per share of 92.40, and that is equal to the equity value of 28,618,714,800. So what does it mean? So basically, when we compute for our equity value, we are computing for the fundings provided by the shareholders. But we cannot say that relying on the equity value in knowing the entire value of the business is not enough, because considering the fact that there are debts of the companies and those debts are varied across the companies, and that should be taken consideration. So that's why we have presented also the enterprise value computation. So the enterprise value considers by debt and the equity fundings given by the firm. So we have already computed the equity value. Now we will compute for our total debt. So that is other current borrowings of 517 million, current capital lease obligations of 89 million, other current liabilities of 2,458,000,000, long-term debt of 7,941,000,000, long-term capital lease and obligation of 594 million, and other non-current liabilities of 1,890,000,000. A total of 13,489,000,000. So the reason for considering debt is because we must also include funding from banks and other lending institutions, as they are the primary sources of funding. However, why are cash and cash equivalents deducted, and why is debt adjusted to net debt? Simply because, let's say if the corporation has cash, that cash may be worth millions in order to pay off the existing obligations. Even the company does not tend to do so, but that is the assumption that cash is going to be paid the debt owed. That's why we netted the debt to get the net debt of 10,776,000,000,000. So again, we talk about enterprise value, and that's the combination of the equity value and the net debt. And so the total enterprise value of the company is 39,394,714,800. So that's our enterprise value, which tends to value the entire company, the Hess Corporation. Again, there's really a difference between equity value and the enterprise value, because in this case we consider the fundings coming from the lenders, and that is the important to consider when computing for the entire value of the firm.
So next is we have our valuation multiples. So we have here our market data, which is already given as to our chosen publicly listed company. So we have here our price of 92.40, which we can also see in our equity value, in which the previous reporter has discussed about this data. So next is we have our market capitalization of 28,618,714,800. So here in our market capitalization, so we use this for us to measure what a company is worth in an open market. So as well as the market's perception of its future prospects, because it will reflect on what the investors are willing to pay for its stock. So next is we have our TEV, or the total enterprise value of 39,394,714,800 pesos. So this TEV is that this will help us, or help the investors to know the accurate value of the company, and also it will determine whether it is undervalued or not. So next is we have our financial data, in which these data presented are found in our chosen company's financial statements. So, which we know it is also important for the investors to know, or so that the investors will be provided with the information about the company's ability if they can meet its short-term or long-term obligations. So, we have the sales of 7,473,000,000. And then we have our EBITDA and our EBIT. So in our case, from our source, the EBIT and EBITDA is already given. So there's no need for us to compute for this data. So we have our EBITDA of 3,510,000,000, and for our EBIT is 1,971,000,000. So we have our earnings of 559 million pesos. So let's move on to our computation for our equity multiples. So here we have our PE ratio, or price to earnings ratio. So our formula for our PE ratio is our share price over earnings per share. So here in our data, or in our company, the earnings per share is not given. That's why we will use the other formula for this computation. So instead we use our market capitalization of 28,618,714,800 divided by our earnings of 559 million pesos. So this will give us a total of 51.2. So next is we have our price to book value. So here we're gonna use the formula of market capitalization divided by our book value, since in our case the book value per share is not also given. So we have here the market capitalization of 28,618,714,800 divided by our book value. Sorry for the mistake. So it should be book value and not book value per share. So we have it at 6,300,000,000. So this will give us a total of 4.54 price to book value. So next is we have here our enterprise multiples. So first we have our enterprise value to sales. So our formula for this is that enterprise value divided by our revenue or sales. So we have our enterprise value of 39,394,714,800 divided by our sales of 7,473,000,000. So this will give us a total of 5.3. So here in our enterprise value to sales, so this will give the investors the quantifiable metric of how to value a company based on its sales while taking account of both the company's equity and the debt. So next is we have our enterprise value over EBITDA. So we have our enterprise value of 39,394,714,800 pesos over or divided by our EBITDA, which amounts to 3,510 million. So this will give us an 11.2 enterprise value to EBITDA. So lastly, we have here our enterprise value over EBIT. So our formula for this is the enterprise value over EBIT. So we have here the enterprise value of 39,394,714,800 pesos over our EBIT of 1,971,000,000. So this will give us a total of 20 enterprise value to EBIT.